Where are folks moving to in 2025? And what to save when you're buying a home.
And then we're going to talk about how to improve your credit score. So this is the Max One Market Update. My name's Alan Richardson.
And my name's Ming Richardson. We're with the Max One team.
And so we want to start off with like where are folks
Folks.
moving to, and like the good news here is that here in Georgia we had about a positive net flow of about 25,000 people that moved into Georgia. Now the cool thing here is that we have folks. It wasn't just this year. So like even last year we had over 50,000 moved. In 22 we had almost 80,000
80,000.
people that moved. And so Georgia is a very popular destination. We have more people moving into Georgia than moving out of Georgia. So if you are looking to move, this is a really good place to kind of come to. We still have a very low cost of living compared to other places in the United States, things like that that kind of show a big impact. For those, like when we talk about folks who are looking to move or wanting to buy a home, does that mean that there's more competition for you out there?
Yes.
It does. I mean, because we have more people moving in from out of state, some of these folks, that like they think our pricing is great. Some folks here may be like, well, I remember where'd all the $200,000 houses go?
Non-existent
They're all
right now.
$300,000 houses now. So like I get that those are challenges, but that's a reality of the market that we are in
But
right
even with
now.
$300,000, we're still considered very affordable.
Yep. So right now, one of the good things that for our folks is that a lot of folks who are looking to buy are currently renting, and that rental market in the United States and even here in Georgia is actually down significantly. Georgia's rental market overall is almost down almost 3% this year versus last year, and that's a really good thing. And like the reason that we want to talk about that is because where people get their money to be able to save, it comes from cutting expenses. And if you can save money on how much like this is the place to do it. Like when you can save money on rent, that's a big deal because you have to save for a lot of things
When
when
you
you're
buy a home.
yeah, absolutely. So we'd love to kind of go over like these are all and we don't say this to scare you. This is
We're
not to
not, but
freak
this
you
is
out.
this is just being proactive, so you know what to expect, so you're not caught off guard in the midstream of the transaction.
Yeah. So the first thing that everyone has to save for when buying a home, first and foremost, down
Down
payment.
payment.
Right. How much down payment do you need? Well, it's really going to depend on the type of loan that you're really wanting to take out. So, like if you are a veteran and you can take advantage of a VA loan, or you're looking to be out into the rural area, we might be able to do a 100% USDA loan. We may be able to utilize a 100% FHA loan. That doesn't mean you're not going to need other money down, other money to put down, but you can get a lower down payment on the initial. But regardless, you're going to have to save, and so the first thing you want to save for is that down payment. The other thing you have to save for is closing costs. Closing costs, that includes both the fees to pay for the attorneys as well as title insurance. The lenders make you pay for their title insurance, plus you have to pay for your owner's title insurance. All those are part of your closing costs, plus the actual fees to actually close down the property.
Next one's earns money. So just think about it. If you were the seller, would you take your house off the market without what they call earnest money? In other words, good faith money.
Yeah,
So seller do require a earnest money. Not all, but most,
most.
99.9% do require earnest money when you want them to take the house off the market so no other buyer can look at it.
Yep. The next thing that you want to make sure that you're considering and saving up the money for is
Mhm.
like moving costs, like the boxes, the trucks. Even if you're using your kids or friends or family,
You still
you
got to have
still got
some
to have some
costs,
expenses in there.
right?
The other thing is once you start moving, you have to also make sure that you've got money for eating out. I know it sounds silly, but you'd be amazed what a whole gaggle of kids will run you when you having to eat out breakfast, lunch, and dinner for days and days while you're going through the whole moving process. Next is going to be saving for the home inspection.
Home inspection is something you will want to have when you purchase a property.
Absolutely.
It's like going to surgery and not having a pre-op surgery consultation. The home inspection is just that important that you want to make sure you're buying a good structurally safe and sound
And
property
you're going to have to pay for that
out of
prior to
pocket.
closing. You're going to have to pay the home inspector when you meet them at the house. Another cost that you're going to have to save for is the appraisal fee. You're going to have to pay this directly to your lender because they won't lend money unless without an appraisal, and you're going to have to pay for that appraisal up front.
And plus, once you get the perfect house you want, just remember some municipalities require utility deposit, so you will need to have those available as well.
Yep. So we want to kind of jump over and talk really quickly about how does your credit score get calculated, and then not only that, how can you improve your credit score? So first thing is how does your credit score? Like how do they come up with that perfect credit score?
What are you land on 600, 700, 800, eight
Yeah,
fifty is
850 is
perfect,
perfect, but
you know.
like I don't know anyone. I've seen 847s. I've never seen an 850. I've never
850.
seen an 850. Right. So, but that is like the premium out there. But what makes up a credit score? So we just kind of want to run down there through you. So
35% come from your payment history, meaning on time payment history. There's no late, no default, nothing like that.
yep. The second one is your credit utilization, meaning are you using all the credit available kind of thing? Normally, you want to keep your credit utilization at 30%, and this accounts for 30% of your credit score. So if you have, let's say that you have available credit $100,000, you wouldn't want to use more than $30,000. Now, those are big numbers, I know, but I'm just kind of throwing that out there. Number three is length of your credit history.
That counts 15% of your credit.
Longer is better, and I know if you're a first time buyer, you may not have the advantage of that. But we're seeing where a lot of folks start their credit history. I mean, some folks are doing it with their while they're still in high school, those kind of things. The length of time that you have credit, the better. You need to have at least how many trade lines do we need?
Two
At least
minimum.
you need a minimum of two trade lines in there. Last thing, or not last thing, next to last thing is going to be credit max or credit mix. The different types of credit that you have, credit cards, mortgages, auto loans, student loans. Student loan does not mean that you can't buy a home. If you have a better mixture of credit, if you only have one type of credit, that actually will hurt you. And then the last thing is,
New credit.
yeah,
That counts for 10%. So any um any new credit you have, that is, or increase in credit actually will bump your credit
And if
score
you
up.
hit up a bunch of new credit, go out trying to apply for a bunch of new credit, it will knock your credit score down. So that's how the credit scores are calculated. How do you then improve the credit score? And so,
Pay your bill on
first and foremost,
time.
number one, pay your stinking bills, right? Pay your bills on time, right? So on time payments are crucial. It gets tracked by all the credit reporting agencies. It is by and far numero uno out there. Number two,
Reduce your credit utilization.
yeah. So that ratio we talked about, that 30% ratio, you really want to make sure that you're keeping it in there. You don't want to have a $5,000 credit card with $5,000 of credit maxed out on the thing. You want your credit utilization at 30%.
And next is check your credit report for errors,
Oh,
because there are folks that may, like I found, I actually had put Alan's Social Security on alert because there was at one point someone named Alan Richardson in
mm-hmm.
Florida trying to obtain 7 cellular lines under his name,
Yeah.
and it
So
was reported.
but check your credit report. You'd be amazed how many errors there are on the average person, but you should check that yourself.
And next, even though we get caught in the holiday spirit, please don't go and start opening credit line with Bill, Kohl's, Target, all
Too many credit
simultaneously.
lines opened at one time will drastically hurt your credit score in there.
And consider building a credit builder. I'm sorry, credit builder loan or secure credit
Like if
card.
you don't have any credit, a secured card or things like that can help you kind of get your pinky toe in the door to kind of get you started on that.
And while I know some of you guys are not using your old credit card account, keep them open because when you close them, it actually has a negative impact on you.
Well, largely because of what we talked about before, the credit utilization rate. So let's say that you have, seven different credit cards and $10,000 in available credit out there, and you may only have $2,000 of credit being utilized at that point. So you'd be at 20%, and then you go and you shut down all these excess cards, and now you've got $5,000 in credit, available credit. You have your $2,000 that you're using. Well, now you're at 40%
Mhm.
utilization. That's going to hurt your credit score on there.
So just understand those things does affect your credit, and your credit also affects your interest rate. So the better credit you have, the better interest rate you will have.
Yeah. So we'd love to help. If we can be of any kind of service, call, text, smoke signals. You reach us at max1partners.com. You can call us at 770-616-5062.
Or reach us by ting at max1partners.com.
Have a great day.
Thank you.